All right, how's this mic? Mic looks good. Okay, well the mic looks good. Let's kick it off then. Well, thanks for those that tuned in yesterday. What is that? Let's get rid of that. Thanks for those that tuned in yesterday. I got some good feedback, some good comments, so I'll do, might do it a couple of times a week. Might be an informal Q&A. If you'd be interested in perhaps a Q&A, I think it helps when you're doing your trading prep. I also think it's very valuable outside of the session. I think the amount of work you can get done in the session when you're learning is a little bit more challenging, but yeah, it's good to get notes and good to learn new things. But I think outside the sessions where you get it all done. So let's have a look at yesterday. I was in the Brooks trading room hosting yesterday, or last night for me, and good session, bull trend from the open. I've got the 15-minute chart here and the 5-minute. I've got the 20 and the 200 moving average. G'day Richard, thanks for jumping on. How'd you go in yesterday's price action? What I might do is I might just work through some of these indicators. I'll link to some of the videos that I've done and basically just go through a bit of a process. I'm not sure the best place to link these indicators are, but hey, we'll work it out. And if I can get my videos up. Let's do that. So I had a video, yeah, let's do it this way. I'm going to do that. Are you trading DAX? Nice. We short today. I tried to get long FTSE and then I got short. So we can go through that as well. Can I post a link in there? Oh yeah, that works. So yesterday on the daily chart, I have a video about signal bars from prior days, and we had basically a bull trend. We've pulled back to the moving average where a good signal bar doesn't trigger. Then we've got a signal bar that does trigger. If you want to see whether it triggers or not, we go above that bull bar. That's a high 1, and then we've got a high 2 here. And so coming into the session, I had a couple of areas marked. I thought, well, we're definitely going to trigger that signal bar. Question is, what's going to happen above it? And that was the open. It was a little bit tricky, I think, for some people in the room. I've seen a lot of these opens, so I know it's important to get long. If you're above both moving averages, even if it's only 60% probability, there's a chance it can do this. It's got the makings of a bigger move. Can I copy that link? Oh yeah, the spike setup worked great. I was already short FTSE, but I looked over at DAX. It actually triggered a little bit earlier on DAX, so that would have been a good one. Basically hit the targets to the letter, and I'll cover that for sure. Look at some spike setups today. So if you're looking at signal bars from yesterday, we're triggering a high 2 on the daily, so you're looking for a long setup if you can. Otherwise, you're looking to avoid weak short setups. And then the same thing, you can see pullbacks to the moving average and then buy signals. If I put the spike, now it's not triggering it because it's an inside bar, but it's the same setup here. Spike and then pullback. Okay, so you don't take that. You're looking to take that or take that on the 60-minute chart. So breakout, pullback. If you don't want to take it on the 60-minute chart, you can take it on the 15-minute chart, which is what I did yesterday. Let's get that whole session up. So we had a spike the day before, and I said this is a really tight channel. Doesn't really matter about the leg count at the moment. It's going to be really difficult to get short below these bear bars, and now we've got a buy signal. Okay, so if you put your stop entry, it's not going to highlight it because it's a inside bar, but that triggers, and so I bought the pullback to that signal bar. So, hey, look, I want to get long somewhere in there. I'll use the 15-minute chart, and then I'll trade it up. And then that was basically my only trade in the session. I'm either scalping or I'm trying to take a swing, whether it's successful or not. And that was the trade. So if you look at what you would have seen at the time, you're saying, okay, well, we're in a tight bull channel, we're above both moving averages, we broke out above this range and we're testing. And so far, no one wants to sell. And now we've got a buy signal. Now that's the second bar of the day. And I said, yeah, look, you can buy above it if you like trading the first couple of bars. I usually wait a little bit longer, but it was in exactly the right place to trigger. And so once that triggered and we went above those bars, okay, well, anyone that was short here is in trouble. If you're selling here, you're in trouble. At some point, you're going to have to decide whether you want to still be short. And so I was comfortable getting long above that pullback. So I got long on 10, and then we had a 60-minute bar. And if you watch my video on 60-minute trading, traders on the 60-minute time frame have a lot more volume than the 5-minute chart. And so those traders are doing something a little bit different. They're saying, well, I'm in a bull trend, I've got a bull bar. What do I want to do? Do I want to be a buyer or a seller at the close or above the high of that bar? I said, well, you really want to be a buyer. You don't want to sell anything. Anyone who was short here probably wants to get out. And we basically had relentless buying after that. So it left a gap open. That's a problem if you're short. And then we took off. Now, I was actually out on 18. I got my 2R and I thought, yeah, that's fine. I'm hosting a live trading session. I've got a good trade under my belt. In hindsight, could I have let part of the trade run? Yeah, I mean, it's up to you how you want to swing trade. So, but I thought that was reasonable. And if you didn't do anything in here because it was a small pullback bull trend, that's fine too. Now you've got a spike and you're looking for a pullback. So you've got a spike, you've got an inside bar. So you're looking for a buy signal to buy above. 21's weak, but whenever a bull bar triggers, so you didn't get taken in there, now you've got another chance to get long, but you're buying on a small size and you're basically going to exit on disappointment. So if you were able to hold it, now you've got about a 16 bar bull micro channel. At this point, you really need to stop looking for high ones because everyone who's already long is sitting on profits and you're getting in. So spikes worked well. Yesterday, a couple legs sideways to down, another counter trend wedge, 1, 2, 3 pushes down. You could have traded that, you could have traded this. Either way, you had buy signals coming back to the moving average. Would have been difficult to lose too much trading that way, and then you're back into the end of the day. So spikes were pretty good. I'll stick to the 5-minute chart. Let's have a look at breakout follow through closes. So another way traders will trade a breakout is they'll look for a breakout based on distance. So this video was breakout second leg trading. So you're looking at the distance and then you're looking for a way to enter for the second leg. Well, now you've got consecutive bull bars. You're buying somewhere in here. Now you've got to close above a high, reasonable to buy. One breakout, pause, trade the second leg. Another breakout, pause, trade the second leg. Another breakout, pause, trade the second leg. Another breakout. Now, if that's your breakout, you probably didn't make money trading this second leg. Bears, what did they do? They had a bear breakout, they were able to trade a second leg. They had another breakout down, they were not able to trade a second leg there. So we had a loss from the bulls there, we had a loss from the bears there. Bull breakout, could you trade a second leg? Nope, didn't work. Bears got another one, so big push down, can they trade a second piece? Yep, that worked. Now we've got a new high, bull breakout. Can they trade a second leg? Yeah, well, if you buy there or buy there, you never had your stop run, so that's okay. And then you've got another bull breakout. So if we count up all the trades, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 out of 10 breakouts, how many worked? That worked. 1, 2, 3, 4, 5, 6, 7. Okay, so 70% hit rate. So the purpose of this drill is to stop traders trading counter trend, okay? If you're holding a trade and there's a breakout against you, you know the highest probability thing that's about to happen is a second leg sideways or in that direction. So I think if you've got an issue with scaling into losers all the time, and I had it for a really long time, that's how you're going to avoid that. So avoid. So breakout second. I'll just put some notes in case traders are watching this after the session, and then you've got a chance to take a look at that. So that's the breakout follow through. If you're trying to trade counter trend, well, you can't short until you see one of these arrows light up first. So that lights up first. So some traders might sell below 33, but it's only to the moving average. Like it's a scalp. It's not. This is not going to be the swing of the day. This is the first trend line break here. You might say, oh, that's the first trend line break, or either or. It'd be very rare for that to just reset all the way back down, and that's why we go sideways. Looking at gaps, very interesting. We didn't get any gaps till after bar 18. So some traders will look at the whole range of 18 bars and they'll kind of project that up for an expectation of what's going to happen. And there you go, surprise, surprise. That was the measured move. So even if you did nothing for the first 90 minutes, now you got a bull breakout, it's okay to buy, trade small and expect a bit more up. Lots of those gaps stayed open. That's a really common trade, 50% of a micro gap in there. Do you have to wait for a high one to trade the second breakout after the first leg? Yeah, well, that style of trading is waiting for a spike to set up. Like if we have a look at FTSE today, I'll just get the cash index up. So this, oh no, I've got the, I'll tell you it's a little bit more confusing. So where's a horizontal line? Oh, I don't have one, okay. Horizontal, vertical, that's what I want. So your session's starting here. So you have 3 bull bars going up. Now you're waiting for a buy signal. I actually took a small long position on the 2-minute chart just to see whether it would take off, and I had to get out break even because once this happened on the 5-minute chart, it's time to go. Now, what do you do if you're trading the other way? Well, you're waiting for a breakout and a pause, so spike and then pause. So I think a lot of traders would have used one of these bars for their measured move. So we're going up, we've got a micro double bottom, new high, we break below here, and now we're going down. So where can I take a trade? Well, I think a lot of traders would have sold under this bar. Betting that this bull bar would fail. But sometimes it's very, very strong, so you don't get the entry you really want. You know, the soonest you could sell, you wait for this spike, pull back, and then you're selling under this bar here. And that's your exit. The other way you can do it is, get rid of that. You got 4 or 5 bear bars, is you take a chance, you need a lower high for your stop, and then you're selling under one of these bars. Probably this. I think traders are expecting a 50% pullback. But yeah, you need a spike to form. So if you're doing the opposite, what it prevents you from doing is getting in too early on this first spike, taking a big loss, and then having to reverse. Instead, the signal never set up. Same here, we've got a spike. And now you're looking for a buy signal. Where's the stop entry? Above that, that triggered, that's not very good, that didn't trigger. Now if we put lines across where these bars triggered and I get rid of the indicator to clean it up a bit, if you took those entries, you had a long time to get out of that trade and decide it wasn't working. In the interim, you've got a spike. You're starting to get opposite spikes. So now you've got an opposite spike. So if that's your spike, sell under 12. Now these bears are making money. If I put the stop indicator back on, 12 is the next stop entry. So I think it's a reasonable way to trade. Is 209. Yeah, that's right. So Brian, on my stop entry indicator, I've basically said ignore inside bars. You can turn it back on, and in some markets where it's really just aggressively moving, you can take them. But in general, I prefer not to trade them that way. So if you want to trade inside bars, I would do a separate little bit of research on it and say, okay, what's the hit rate of inside bars versus not trading them? The way I would usually trade an inside bar is wait for it to break out and test back. And that's exactly what I did on ES yesterday on the 15-minute chart. So if I turn CSC bars, I turn stop entries on. Where are we? We're there. So stop entries, inside bars. That inside bar there is the one that triggers, and I just wait for it to come back, because I'm betting traders are going to fade it. You know, it's 50-50 bar. There's always people doing the exact opposite. So breakout test. Yeah, so give that a go when you're taking a look. I think that's helpful. Okay, so we did spikes. We looked at gaps. Big bars yesterday. So it's kind of interesting if you ever try and build a breakout indicator to, help your research and work out how to improve your entries. One really interesting thing that happens is you get sets of bars with no breakouts. And this is very, very strong. This is really common to get this. You look at this chart and look at places where there's no breakouts and you think, oh yeah, well, it's a trading range. Nothing's happening. And like, no. Areas where there's lots of bars and there's no climaxes, they generally explode out. Trading ranges have lots of these big bars that just immediately reverse. So that's kind of an interesting thing. So you're looking at a small pullback trend and say, well, no one's got paid, no one's gotten stopped out, and now on the higher time frame, this is probably a better pattern. And so some traders were waiting for that breakout. Where's the measured move? Well, if that's the pullback, maybe that's the measured move. But can you fade these bars? Well, if you waited for 50% pullback, you didn't get filled. Here you got filled on 24, so that worked. Reversing, you don't sell below, but maybe scalpers will take the sell down. Not a great day for counter trend scalpers, at least the first couple of hours. So limit order entries. In the room, I said that if you were waiting to buy below a bull bar, you were left empty-handed. And that, to me, is a really good sign of urgency, because you're being a little bit conservative. You're waiting for price to come back and fill you. You're not buying at the highs. You're just patient. You're just waiting for the market to show you something. And you're waiting and waiting and waiting and waiting for a pullback. And you're like, well, hang on. If I'm waiting for 30 minutes for a pullback, we must have some urgent buying. And so that was a sign it was okay to buy small and add, or wait for breakout. So not good for limit order traders. The alternative is you look at the 5-minute chart and you're confused and you say, okay, well, I'm just going to look at the 15-minute chart. Nothing climactic till then, no gaps, breakout follow-throughs. So bar 3 was that third consecutive bull bar. You're above both moving averages. I mean, you're above a breakout point. Why not go up, hey? You're either going to be right or wrong. And if you're going to be wrong, you're going to be wrong immediately. You know, the moment you buy, it just turns down and you take a small loss, but not your full loss. So anyway, I hope that was useful, just looking at some of these indicators. I might just let me know about Q&As and timing. I was going to do some kind of session maybe before the market opens, maybe a little bit earlier. I'll see. I wanted to do some other stuff. Yesterday, in terms of day structure, was basically 2R on the 60-minute chart. So someone just buys this bar and says, yeah, well, it's a bull bar, it's breaking out. What happens? And then the very next bar, they get essentially a close above 1R. Well, you may as well hang on. You can exit or leave some on. And then the market reversed at 2R. So basically bull trend from the open. If you wanted to use the lower time frame chart, so if we split the day into two parts, the strong breakout there, it's really about what do you do in here? Well, if you sell there, traders really struggle to get a second leg, so that's not good. Can't sell there and get a second leg, that's not working. Don't even get a bear breakout. You see how like there's no bear breakouts, but the very opposite, you've got bull breakouts and no one's getting stopped out. Bull bars and follow through, bull bars and follow through, bull bars and follow through. So even though it's not strong, one side is getting forced to scale in and the other side's in control. And then usually I'll put on, I'll draw a box or something and say, okay, well that was the last spike. How are those guys going? Oh, terribly. Hi, Wei. Thanks for jumping on. We're just running through yesterday's chart, just saying that even if you use the 2-minute, you can also use a channel from yesterday. We had two channels that made sense. We had this one. And we had this one. And this is really common on the open. You get these two patterns, and although channels are a little bit of nonsense because you've got to keep redrawing them, at the same time, it's a band of price action. So traders don't really want to be up near the top without taking profit. They don't want to really be down the bottom without taking profit, so you just kind of sit in the middle. But what happens with a channel is if it's really tight, it breaks out and then it broadens, and then it breaks out and broadens. And when it's steady and consistent like this, then traders start to wonder, well, if we're no longer breaking out of this channel, we're probably going up here. Now we're up here, we've got too many bull bars. I mean, do you really want to start selling? No one else is selling. So, channels from yesterday, I did a video on that. I think that's pretty useful. I might just pull up my Notion for a second, just So what about coming into the session today? We've got a monthly high one. Basically, any time you can buy above a bull bar. That's the last place you can get long on the monthly chart. So, same thing. Now we've got a lot of bull bars. We're breaking above this this prior bear leg. So if you sold there, you're really hoping for more of a profit. So if we go up higher and come back, it might be that all those bears get out. Excuse me. Well, does the indicator not work? Oh, I know why. It's ignoring the daily. Whatever, I'll fix that. So we've got weekly buyers, and now we've got consecutive bull bars. Now, usually when you get a couple of pairs of bull bars above or pairs of bear bars below, the market tends to just immediately go sideways. It's like a signal to say, hey, stuff's about to change. The bears would like this, like a total collapse, but here we're under a swing point. Here we are over a swing point. So I wouldn't be surprised if we just pull back to this area on the overnight, or if we're in the RTH chart, we just start working our way back up in a channel again. This was really strong. This was a little bit less strong. So, this angle is changing as well. So first we're like this. Now we're a bit more like this. And then this is pretty common. So if we're going to do that, it's probably going to be more sideways. But bears here definitely got stuck. That's what I thought was going to happen yesterday. And that's because if you sell the close and the next bar opens here, you're like, oh dear, what happens now? Hi Richard, could this be a trading range on the monthly? Let's take a look. On ES? Kind of hugging this part of the channel. I think likely we will break above, go sideways, come back to the middle, and then probably do the same, break below, sideways, come back to the middle. We might do that for a while. Lowest probability, I think, is just to get to 6,000 and break out. Like if we were to do yesterday's price action on this chart, that would be unlikely. We tend to break out of channels if you do this. So you're coming up here, it's trying to break out of the channel. We go down to the bottom and then we visit the midpoint and then we decide. So I expect we're going to do the same thing. We'll go up, down, sideways, visit the midpoint, and then might be in a big monthly trading range. But not yet. Weekly, yeah, well now that the pullbacks are getting larger, I said this in the stream last night, this pullback's big, this one's bigger, so, as much as people don't like harmonics, which is, the repeated rhythmic moves of the market, the next pullback's likely to have at least this distance, and it can be a couple, it can take a while. So yeah, I think eventually we're going to form a trading range and do this, which is about 600 points. And it seems like, oh my gosh, that can't happen. But, small pullback, small, bigger still, and then collapse. So the COVID spike was crazy because traders just wanted this to turn down. They just kept getting bigger and bigger and bigger and bigger, and then all of a sudden you get new breakouts. And it's like, oh no, if you were shorting, you're in a lot of trouble. So that breakout and then this. boom. And then even bigger. Then we do the opposite. So I looked at high time frame, lower time frame, just looking at my list. Maybe I'll wrap that up there. If there's no more questions, I might just wrap that up there. I'm still trying to work out how to live stream to YouTube and what's going to be useful. I'd like it to be consistent if traders are interested in Q&A. I guess I'd prefer more to talk about different trades if people want to submit trades as well. But hey, we'll see what happens. So, okay. Thanks very much, everyone, and good luck trading ES. I might have a break, and then I'll come back for the US session to trade. So, happy trading. Catch you all soon. Cheers. Bye. Thanks, guys. Thanks, Brian. Thanks, Richard. Thanks, El Culo. Cheers.